Yo, good morning. Let me just get my mic all situated like that so you can hear me a little better. What's up, guys? I've skipped a couple days here when I was uploading videos. Um, I was trying to get all situated for a challenge I'm doing. I'm doing a 30-day demo challenge um, with a $5,000 account while I'm saving money right now that I can put in the market. And with this challenge, I really want to see results. If I don't see results, then I'm probably not going to go back live. I'm pretty confident that I'm going to see results. So that's why I'm doing this, is because I want to see if that's right. So I'm gonna do the challenge, and that's it. Yeah, but right now we really only have like 20 minutes, so chances are we're not gonna get a trade that's worth the time, that's worth the risk. 20 minutes isn't really a nice trade for me anymore. I remember I used to be taking scalps and used to be doing this, used to do that. I kind of have a different plan right now. My plan is if I have different tiers of trades, and I have size according to the tiers. So I'd like to call like a trade here, um, like a C trade or a B trade in the morning, and usually B trades are gonna take about an hour. For me, for my time frame, since I'm on a 3 minute time frame, right? It'll take me about an hour for a C trade, and that's open to close. I have a max time risk with the B trade, and it's planned that way specifically, so it doesn't turn into um, a trade that it's not. Because a lot of times we like to hold our trades if they're working really long, like we like to hold them for a long time, or we do certain things um, while we're in the trade when compared to when we're not in the trade. So it's important that before you go in the trade, you have these you have it pre-planned, and a lot of times in the open, there definitely is opportunity in the open, but it's opportunity that I'd want to size down in big time because there's volatility, because it's probably going to be ranging, so you want to size down. It's not a time to size up in the open, just because it's very unpredictable. It kind of is predictable, but at the same time, there's a very good chance that not enough volume has played out on your time frame. Um, so it would be a better option to show multiple time frames in the open, smaller time frames. But yeah, today we're really just gonna look at the market right now and analyze, and then I'll make another video later when we catch a trade. But as you can see right now, I identified what can kind of happen in the open. As you can see, it shot up past my range here, and we are slowly starting to trade inside of this range here. And I can almost expect, you know a little bit of come down below this range here. I think that'll be almost expected. But this is kind of the deal for today, though. It's looking like we might get some pop-ups, but this is I like to draw out the pre-market. I actually didn't like to do this, and I would actually only use just the normal daily, or sorry, just the normal hours without the extended hours on. But I think the pre-market gives you some good guidelines for how the day might trade. So I like to do that now. And right now we're just looking at um, SPY rejecting off the zone. And yes, like I said, probably not going to get a trade in. I've scaled my trades back way, way more. I'm usually only trading 1 to 3 times a day. Three is pushing it now, If it's usually it's one. There's usually one good trade a day, that I can take. Whether it's a ranging market, trending down, trending up, whatever kind of market it is, breakout market, it's usually one trade a day for me that I could say, okay, this was the best risk to reward of the day, and I took it accordingly. There's usually one trade like that you can almost bet is going to be like that. Um, so you can almost guarantee one trade a day. But two trades is kind of like, if the market is ranging, um, you get out and like let's say the market was ranging, right? You would buy at the bottom, you'd sell at the top, and then you'd sell more at the top, and you do another move to the downside. You know, um, whether or not that should be repeated, that's different because if it's ranging, chances are it could break out or break down. So I usually like to take one trade like that, where it's just you do a call at the bottom, and then you sell your call at the top, and do puts at the top, and sell your puts at the bottom, and that way you kind of get two trades in one trade there, and that's all. Because you're reading the volume for when to get out, right? If you're in at the bottom, you don't want to sell at the top if the volume is not saying sell at the top. If the volume is saying it's gonna break out, then you do that. But like here, like this is a good example here. You know, you'd have your call. You'd do your call like here. Let me get my arrow here. You do your call here, okay, and then you'd sell your call here, right? Then you take a put here, and you sell your put here. Exactly. And this is a little bit too tight of a range to be doing that. That's definitely not enough risk to reward, you know. So you could probably do it at something a little more rangy, like yeah, almost something like this between these parameters here. Like that's a good range to do it on. But if you identified it, in the time, it's gonna do a double bottom, But we'll come back here. Look at the SPY. It would have been nice to grab a put or so, but they're just in the case that it bounced above this line here, there wasn't enough risk to reward. There it just wasn't a good enough trade. It had to come down here. It's just not that good. I mean, yeah, I mean, so there's profit there, but whether or not it's worth capital, emotional capital, financial capital, whether or not it's worth capital, that's a different story. So that's where I'm kind of at right now, and but we're gonna keep watching it for here about 10 more minutes, and then we'll check it out, see what the market has to offer, 2 hours later in the day. Right now, I've got physical therapy, so I'll be leaving, and then I'll come back in 2 hours, and we'll hit it then. But I usually want to watch the open like this and see how it's acting, if it's respecting this pre-market trend here. If it's not, then chances are the trend is it's not a right trend. This one looks okay. As you can see, we were ranging and it broke down, but it didn't like that, so it came back up in the range, and then it held the top of the range, and it kind of showed signs of breaking out, and then it faked out and broke out, and so it is kind of respecting this range here. So that's gonna kind of be my intraday support and resistance here. starting to break down out of this range here. That might be expected if we're going to pop back up later in the day and then shoot up towards the range. That could be expected. What I don't think it's going to continue trending down. That's just what I don't think, right? But I'm a trader, not an analyst. So if it's trending down, I can find a trade like that. As of right now, the trade almost looks like we're gonna break down here, hold a little bit, pop up, and either hold sideways like this close to it, and it won't get back into it, or we will come back into the trend and move higher. Because don't think it won't. I mean, I know it looks high. It looks like it's, moving up higher, but it's a good possibility it can. And here's a good example of why you always want to let the open and the close tell you if the stock has broke out. You can see how it shot down past it, but it's almost closing right at that trend line there. That's kind of a way to really see if your entries are on point. Are you entering when it's the price is breaking out, or are you entering when the actual candle is broken out? Because if you enter when the price is broken out, you might a lot of times get faked out. So it's important to see the actual candle, right? The entire candle, the open and the close. It doesn't matter the high or the low. It just matters the open and the close. Is the open and the close below or above your trend line? That's a pretty confident breakout, I can say. You see we got increasing vol, so we had decreasing volume here coming down into the trend line. We have increasing volume, and especially we had this sell volume divergence here, so there's definitely buyers at this trend line. So that's good. Even if we don't hold the trend line, that's good, because that just tells me that we're going to see some kind of magnet on this trend line for the rest of the day. That at least there's some activity on this trend line, right? It's not just like a dead trend line. You don't want like a dead trend line, right? That'd be crappy if you're a trader. Yeah, so we are seeing rejection there off that bottom, and we're coming to this top here where we should see sellers, but we're going to wait and watch the candles, see what the volume is, and yeah. So what would be a nice trade now is would be a bounce, and so what you do is you'd see if there's increasing volume here. If there's increasing volume here and there's no divergence in the buying candles, chances are it's going to shoot up past it, and that can be a trade. That could be an hour trade. That could be a trade worth an hour of risk. And it's not like it's going to shoot straight up in an hour. It could pop up and consolidate above the trend line here and then shoot up. It could pop up and shoot up and then consolidate. So an hour is just time, max time risk in the trade. So we're just going to watch what it does. And we're going to see if we have any divergence in volume here, and that's going to tell us where kind of what we're going to be doing for the rest of the day. So right now we should already almost have half the volume of the previous candle, which we don't. So that tells me there's not many sellers here right now. It's just all just buyers. It's moving. It's moving on very low effort. So there is not many sellers above this trend line here. So yeah, we could definitely see a nice pivot. That would have been a good entry there. Is to see that it's just moving, and there hasn't been any sellers taking it over yet. That would have been a good entry. But we might encounter sellers getting here. It might be getting here because we're getting close to that top there of this resistance. Getting close here, we'll start encountering some sellers. And we should see a buy divergence. Maybe next candle, or maybe this candle. But there should see a buying divergence, and if there's not, that's a great hold the trade. Keep holding the trade until you see that buying divergence, which is followed by increasing volume to the other side. So we want to see increasing sell volume, and then you'd like to run that trade. They're starting to get a little bit of divergence here. As you can see, we have definitely higher volume. We have increasing volume here, but the stock has only gone up just as much as the other candle almost. So that's definitely proof of sellers, and this candle should display it as it tries to go higher, even on volume that is average or a little below average. It'll try to go higher, and it just won't be able to go higher. And that'll be the indication that you want to take puts now back into the trend line bounce. Or if that's not the case, you'd want to wait, especially for increasing sell volume, because we have a buy volume divergence, so that's decreasing buy volume. Okay, it doesn't mean that sell volume is increasing. Sell volume wouldn't be increasing if we saw especially high volume and then the candle went red, or that we had a very small body of the candle. That'd be increasing sell volume. I say, okay, it's time for some puts. But if it's only just a small divergence, you definitely want to wait for increasing sell volume here. And see, I'm just walking through the trade. I'm not taking the trade because it's not enough risk. I mean, it's not enough reward to risk right now. So we're just gonna walk through the trade and get some practice right now. I actually have to go here in just a second. So depending on what this candle does is going to determine if I would sell right now. Just because we saw a slight divergence in the previous candle, but that could have just been all the sellers that were there. So that's why you want to see divergence and then increasing volume of the other side. And sometimes the increasing volume isn't displayed here. It's displayed in the divergence. So you have to be able to read that. How is the volume increasing? Is it increasing through the green candles to the other side? Is it increasing through the divergence? That's what you'd like to look at. So we're starting to get sellers trying to push it down right now. But I'm almost not convinced to sell yet. I want this candle to close, and then I'd want to see the volume on that again. Because right now we're at same volume as that other previous candle, and the stock just did not move. So I'd like to take the trade, because that there is increasing sell volume for sure. You take the trade now, and this will possibly go down into the trend line, or it'll even shoot past it. But anyways, I gotta get going. But we'll just see how this plays out for a second, because I want to see if I'm reading the volume right and everything, and I just want to test my skills here. Right now, I'm thinking it's gonna shoot down into the trend line, or and go past it. So here we go. We're starting to see an increase of that was definitely an increase of sell volume. But depending on how much, risk to reward there is now, you probably would have wanted to enter the trade earlier on that other candle. Just depending on where it goes, depending on if you'd hit it in the trend line, or if you're playing the trend line bounce where it goes into the trend line, or whatever you're playing. I personally wouldn't even be playing anything. I'd just wait to see what the volume does, and if the volume is showing, then there we go. But anyways, I really gotta go, so I will see y'all later.